we start with breaking news. President Trump taking on the Federal Reserve and its chair, Jerome Powell, again. Let's go to Eamon Javers at the White House for the details. Eamon.
Yeah, Michelle, some criticism here from the president of the Fed chair. This coming in an interview with Reuters earlier this afternoon. It was an off-camera interview, but a couple of the key points here from the president. He says that he's not thrilled with Jerome Powell for raising interest rates. The president critical here, saying that the Fed should be more accommodating. He says, I should be getting more help from the Federal Reserve in terms of the economy, and says he will continue to criticize the Fed if it continues raising rates. So the president here sort of unshackling himself from the recent norm over the past couple of decades in which presidents really didn't criticize the Fed or tried to shy away from being critical of the Fed, and going back to a pattern that we've seen, going back 30, 40 years or more, in which presidents engaged in sort of semi-open warfare with the Fed. That's where this president has found himself going into these midterm elections. The president very critical of Jerome Powell, frustrated with the raising of rates, and worried that it might hurt the economic recovery, which the president views as the centerpiece of his agenda here in office at the White House, Michelle.
Yeah, absolutely. Eamon Javers, thank you so much. Eamon Javers at the White House. So will the president's tough rhetoric impact the Fed's next move? And if the Fed starts hiking, are we in as much trouble as Trump thinks? Guy Adami, what do you think of the president telling Jerome Powell what he thinks?
Always great to have you on.
Always a pleasure to be here.
Michelle.
You've been away as well.
I apologize.
I'm right here.
Hi, Tim.
I'm right here, too.
Kay's here.
I've been here the whole time.
So everybody
I don't know what
but
you guys have been
MCC
doing, but I've been here the whole time.
It's gone.
Right.
So to answer your question, will it affect the Federal Reserve decision? Absolutely not. There's no way it affects their decisions, in my opinion. The Fed has been extraordinarily transparent. I think they'll do what they need to do. They will act to the extent that the data suggests they should act. Number one. Number two, by the way, not to get political, but when President Trump was candidate Trump, he criticized the Fed for the exact opposite reasons. So you sort of can't have it both ways. If I were president, which I'm not, I'd say, you know what? The economy is doing so well under my administration that it makes perfect sense that this Federal Reserve would be raising rates. It might not behoove us in the short term, but this is a long-term gain. I think they should remain independent and do what the data suggests.
And that's the point, because Larry Kudlow was on the air on Friday saying the economy's crushing it. So under those circumstances, it's okay for rates to raise. I agree with you, Guy. I think there's very little chance that the Fed, in fact, I think the chance is probably 0.0 that the Fed actually acts on this. In fact,
How would you know?
I think Powell
How
probably.
would you know, though?
Well, hang on a second. Let me finish my sentence instead of just saying stuff over and over.
How would you know? How would you know?
Powell would sooner quit than actually have monetary policy impacted by this.
But here's the thing. To Steve's point, how do you ever know? If there's a moment where it's questionable, should they or shouldn't they? Are they or won't they? If they don't, you think, oh, maybe they listen to the president. If they do, wait, let me finish. Okay. If they do raise rates at a time we think is questionable, you think, wow, maybe they're trying to tell the president something. Like there's this whole layer of psychology that has been added to the Fed decision.
I don't think that happens whatsoever. I think if our economy is so fragile that 25 basis points is going to destroy the whole thing, then we don't have a good economy at all.
Yeah, I think to that point, though, you don't know whether it was going to be 2 or 3. There is some room to digest it and say, hey, maybe, just maybe, you don't know how it affected that gray area. So I don't know if we'll ever know. The counterfactual is a hard, slippery slope.
So, and we know that this president's going to get out there and do unconventional things and say unconventional things and push on institutions, frankly, that aren't used to getting this kind of push. Fact of the matter is the Fed has moved 5 times since he's been in office. 2 of them have been under Powell. If they're moving, it's because the economy is in great place, as everybody says. If they're not moving, they should also be thinking about the impact of of tariffs and the impact on inflation, because we absolutely have inflation coming through the pipeline. And if you listen to every regional Fed president, if you look at what the numbers that are feeding through on ISM and other kind of price inputs,
not out of control.
We have inflation. Well, we're at 10-year highs on CPI, Steve. So I mean, you tell me.
Not, but
I think we.
No, I think there's room.
I'm not saying it's run away.
Right.
And here's the other thing that I would take the side of the president on. If you think about it, what are people always most critical about the Fed? Is that they are a step late and they ultimately push us into recession because they're too aggressive with the economy when they should be taking their foot off the pedal. Bottom line here is this Fed needs to continue to normalize. We're not even in a Fed cycle right now.
Hold on, you got to a very interesting, provocative place. Let's put aside whether or not the president should or should not say anything. Is he right, though, ultimately, that they shouldn't be raising rates as aggressively?
Look at when we've raised it in the past. We've raised it in the face of that financial collapse, whether it was Greenspan. There was an aggressive nature to it. And to Tim's point, there's a lot of times the Fed's been behind the 8 ball.
And then they try to make up for it.
And they make up for
Yep.
it. So at this point, do they do too much in the face of an inverted yield curve or pending inverted yield curve?
Don't you think that's a huge risk to the stock market?
It is a huge risk. It's been a risk we've been talking about for a while. So I'm glad you mentioned that as well, because, again, I'm trying not to get political here, but this is an administration that has said from day one, the stock market is a report card for how we are doing, right? If the stock market were to ever go down, now he is put in a place where he can blame the Federal Reserve. It wasn't my fault. Wasn't this administration's fault. The
Which
crooked
every other
Federal
president
Reserve
has done. So,
fine. My point is that's given him now air cover that if the market were to go down, he takes zero blame.
But let's focus in on that core risk. Could interest rates go up too much and hurt this market?
Well,
yes.
Let's.
No, not at this level.
Rates should be going up, and stock markets should not be expanding their multiple. The S&P multiple should not be expanding in a Fed hiking cycle. I'm not saying that you shouldn't be buying stocks here, and in fact, I think that the economy has been very supportive of consumer stocks and discretionary, and they're parts of the rotation process in the market we should be following. But the Fed should absolutely be doing what they're doing. Let's be clear. I mean, they have two mandates. They have an inflation mandate and they have a growth mandate. Right now, I think the growth mandate's doing just fine. If anything, folks, it's time to look at inflation. It is feeding through. We're at 10-year highs on core. I mean, it is what it is.
The biggest threat to this market is a strong dollar. We've had a bit of a strong dollar, and look what it's done to the emerging markets. If the dollar continues to strengthen, that is the biggest risk. To me, I've said it before, I'll say it again. The dollar is the new VIX for this market.
The 10-year has been a yield on a yield basis has been coming in, and the market is flirting with all-time highs. So when you sit here and say they're doing what they should be doing, I agree. If the market's growing, then rates should rise. But you can't always have exactly that scenario. And I do believe that people come on every day and talk about an inverted yield curve. That is the worry of this market.
Fed doesn't control the 10-year. All right. Let's also be clear about this. And if it was 9 months ago, we were whinging and you were very concerned about a 3% 10-year. Right now, the market wants to see a 3% 10-year.
But QE is about the long end of the curve, right? The unwind is going to affect the long end of the curve, for sure.
But the unwind of QE is not in question, right? We know what's going on. QE, that's done. I mean, ultimately, we're getting to a place where the balance sheet is shrinking. That's the second part of this whole thing. You've got tightening coming from both sides. Brian also brought up, look, the tightening that's coming from the dollar is one of the big issues right now. And I would ultimately say that the Fed can actually impact the dollar implicitly, although they would, again, never talk about it.
The dollar was impacted by the president today. It fell on his comments.
Fascinating, right? Again, maybe other presidents have talked about it. Maybe it's just a different time where things are 24/7. We hear it. I'm surprised that he continues to sort of double down on this whole,
really?
By the way,
absolutely.
He is a dog with a bone. What are you talking about?
You look particularly swarthy, but where did you spend time this past week?
I was out east.
You were in the Hamptons.
East.
Also where the president was.
Yes,
where
and
apparently he was at a
we were
party
not together.
where
You were
a
not
lot
at
of
the
this
fundraiser?
whisper this was coming through to markets last night. So the fact of the matter is he has let it be known, and he let it be known at that party. I wasn't at that party either.
Of a weaker dollar?
Bottom line is
he's let it be known before he was elected.
No, but no, that he was going after the Fed
he went
again.
after the
And
Fed at the Hamptons
this is
fundraiser.
news that I think was surprising yet not.
A guest has joined the set for more on the Fed and what it could mean for the market. Let's bring in Jonathan Golub. He's Chief U.S. Equity Strategist for Credit Suisse. Good to have you here.
Good to be here.
Were you at that party?
I was not at the party.
Who was at that party?
I'm wondering, who is he whispering to that he actually thinks is going to influence anything? There's no, I agree.
He's the president of the United States. He says it out loud. He's a leader of the free world. Jay Powell's going to hear him. I mean,
out there. And it's like telling a jury after the fact. I think, Michelle, you said this, is if, in fact, they do pause because the data does get a little bit sloppy or the curve starts to invert and the Fed wants to take their foot off the pedal, people are going to say, did the president cause it? But absolutely not. There's no way that the Fed is going to let this influence them.
Are you worried, though? Does the president, put aside the fact that he's the president, does he have a point to be worried about the Fed getting too aggressive?
If they raise 4 or 5 more times from now, then he would have a point. But right now, where interest rates are, they're just too low. This economy is doing incredibly well.
But if the economy continues to perform and they continue to raise rates, you're still on board with you could raise rates until they're blue in the face. At some point,
that's what they're supposed to do.
it's got to
There's a tipping point. I think that we're good, and I think your point is right. The long end of the curve is what matters to the markets, not the short end. When the 10-year hits something like 3.5%, then you start taking a bite out. Between now and then, it's a signal to everyone that things are healthy. And we also forget This is really good for retirees and savers who have a little bit extra yield. That supports consumption. We've seen that the savings rate is up. Giving people, more money to spend isn't a bad thing. So yeah, I don't think this is.
What are you telling people to do right here?
Oh, this is really simple. The U.S. U.S. regionally is the win. Technology stocks are the win, and stocks are a win right now.
Still. Because everything you just said, we've outperformed Europe. I mean, we're at a 2-3 standard deviation moment in terms of the outperformance of the S&P to the rest of the world. Wouldn't it be time to say, hey, I think this is a little overdone?
If you're looking at the price action, yes. If you're looking at the fundamentals, on earnings, we're growing at 3 times faster than Europe. If you take out all of the tax benefits, we're growing at twice as fast as Europe in terms of EPS. If you look at our economy is growing twice as fast, and they have no technology sector. So I think that this thing is going to continue to run. And yes, we're more expensive, but we're delivering more, and we're less volatile.
What kind of technology? Are you talking about FANG? Be more specific.
So if you're looking at, I think that we'll call it new technology, but just in general, if you look at technology broadly defined, I think that what we're missing is the addressable markets on these stocks are so big. I mean, look at let's say the sales of Amazon compared to the sales of Walmart. It's a third. Where's that going to be in 5-10 years from now? Equal, twice as big, but much bigger. Whereas if you take a look at online advertising, which is way less than half of advertising, what's it going to be in 5 or 7 years? How big is the cloud today compared to what it's going to be in 5 years? I think we're missing the story here. Tech right now is 30% of the S&P. 5-7 years from now, it'll be 40 to 50%, and that's the story.
So this week, or the past week, we saw Walmart move sharply higher.
Right.
All of retail, but still, Amazon versus Walmart, you say?
Well, the sales numbers are killing it on the side of Amazon and online. I think what you have going for all of retail is the economy is so good that the consumer is spending more money, and that's the story there. But the long-term story is a reallocation of how we spend.
My quick question would be, everything's great, okay, fine. What's the existential risk then? There has to be one, or at least one.
Well, it's the one you're talking about here. Inflation eventually is going to bite us. The economy doesn't, run with a 3.9 unemployment rate growing this fast without inflation eventually showing up. And it's either the Fed kills it, or what happens is that it squeezes profit margins because companies have to pay more out to the workers, and you're already seeing them complaining. So it's not an issue now. Is it a year? Is it a year and a half? At some point, it's going to bite us, but it's not today.
Jonathan, always good to have you on.
All right.
Jonathan Golub joining us from Credit Suisse.
Well, I tell you what, Jonathan brought up a really interesting point when he talked about the rest of the world or Europe doesn't have a tech sector. I don't want to goodbye the guest, so I'm not going to bring him back in, Guy. But bottom line is, if you think about other parts of the tech sphere globally that have been beaten up, and as you know, I kind of live in some of those places. If you look at Chinese tech, or if you look at some of the tech in other parts of the emerging world, the same argument should be held, and I think a lot of that stuff is way overdone. We've rebounded significantly in the last couple of days.
S&P has to now test those levels that we saw back in January, which I think we're about 30 handles or so away. So I continue to think it grinds higher. But again, getting back to the president, I think he's just setting himself up for air cover if, in fact, the market would ever go down, on top of which, talking about currency manipulators gives them air cover for the whole tariff things as well. So in some ways, it's brilliant that he's bringing this up. In other ways, it's very scary.